Today is the first lecture for this. This will be the introduction to RBWM. Introduction is directly from your book only. Hi Kirti, hi. Good evening. Everyone, good evening, and let's start. Okay? Retail banking. So everyone is working in retail banking, all of you? Is anyone from non-retail, like corporate banking, somebody is working, or is somebody working in trade finance, somebody working in treasury? Is there someone who's working in other departments other than retail? Anyone? Okay. So this will be very easy for you. First chapter will be. Okay. Why? Because basically retail banking you already know. So we'll be doing this introduction part. What are banks? Banks are financial institutions that, now you only tell me, that do what? That what? They take the deposit and give the loans, isn't it? Basic job is what? That perform the deposit and lending functions. They take various types. There are various types of banks in India. India means now we'll call it Bharat. I don't call it India nowadays. Nowadays, its better word is Bharat, right? There are various types of banks in Bharat, and each is responsible to perform different functions. What are the various types of banks? Firstly, what is this bank? Let's see that. Okay. See, this bank means what? This is the bank. There is someone who's having extra money, surplus money. There is someone who doesn't have money, need money, right? So what does the bank do? The bank's job is simply to transfer the money from the excess to the needy. Simple, isn't it? That's what we do. And what do we do? Yeah, deficit money. Correct. Correct, Apurva. And what do we do earn in that? We earn the spread. What is the spread? The one who gives me the interest and the one whom I give the interest, depositor. So the difference between them is my job, is my earning. From that, all the salaries, for all my electricity bills, everything is covered, isn't it? What are the various types of banks? Central bank, cooperative bank, commercial bank, RRB, local area bank. Plus, there are others which are not mentioned in this. I have written it separately. Merchant bank, treasury, trade finance, various types. There can be few more. Investment bank, where is it written? It's not written. Investment banking, that's also a part. Wealth, you can call it wealth management bank. So that can also be a part of the banks. Here nowadays what has happened is bank is not limited nowadays to saving and current and FD. Okay, so investment management, that is one. Then wealth management, this is also one department. Wealth management. Okay. So these are the various types of banking. Central bank, RBI, cooperative banks. Many of you might not be knowing cooperative banks, especially those who are in North India. In South and Mid India, we have cooperative banks, many cooperatives. So these are cooperative banks. We'll come to this later. We are having a separate topic on cooperative banks. Okay, we'll be studying them. Commercial banks means all are. What are commercial banks? All our banks are commercial banks. All. Okay, let me show you. See this. This is for banking and one sec. Yeah, this is over here. This. See this. All our banks are commercial banks. Commercial banks means what? All foreign bank, RRBs, public sector banks, and private sector banks. All these are commercial banks. So every bank is a commercial bank except cooperative bank. Cooperative bank is not a commercial bank. Okay. So what are the types of commercial banks? Foreign bank, RRB, public sector, and private sector. How many of you are working in RRB? RRB. Anyone's working in RRB? Regional Rural Bank. Anyone is there? So some of us who are working in the commercial banks don't know the structure of RRBs many times. Okay, yeah, RRBs are basically these are sponsored banks. Okay, these are again nationalized banks only, sponsored banks with a percentage. Central government 50, then state government 15, and 35% is by the sponsor. Generally, I'll tell you, Bank of India has one RRB in Maharashtra. They have it, and everywhere there are many RRBs as such. Okay, so basically every RRB has a sponsor bank. Kindly remember this. Public sector banks means which are owned by the government. Owned by the government means what? Those are not completely owned by the government. Government has a majority stake, majority shares. Private sector means nothing. Directly in the hands of the privates, like HDFC Bank, Yes Bank, Karnataka Bank. See here, private banks also there are two types, old and new. Okay, old private sector, new private sector. Old means all those which were formed before 1991, means before that Narsimham Committee 1991. And new age means all those which have been formed later. HDFC, ICICI, this IndusInd. Okay. So coming back. So basically, local area. What are local area banks? These are different. We'll be studying them. I am having a separate slide on that. Merchant banking, treasury banking, trade finance. These are again separate terms. We won't be having that much. What is merchant banking do? Merchant banking mainly deals in IPOs. Okay, yeah, above 15% stake. Merchant banking mainly deals in IPOs. Kindly remember this. Okay, means all our banks are having the merchant banking arms. Even SBI has it, PNB has it. All our nationalized banks also have the merchant banking arm. They deal in all that IPOs. Whenever suppose any company wants to issue IPO, these merchant banks help them. This much is enough. Don't go deep into merchant banking. Treasury functions means buying and selling of bonds. Trade finance is mainly related to export and import. Okay, business. Investment and wealth management, you are having the topic separately. Banking will be for various. See this. Who are the main customers of the bank? The main customers of the bank are, one is individual, means human being like you and me, and second is firms. Okay. Now individuals means what? There are again two terms, retail and entrepreneurial. Means here we give the farming loan also, agri loan, MSME, that comes under entrepreneurial. Retail means mass retail banking, saving current, classic retail. That's okay. Don't live to this. Important part is only up to this part. Individuals are retail and entrepreneurial. Firms are wholesale and MSME. Wholesale means, what do you mean by wholesale? Here the other word for wholesale is corporate banking. Kindly note, corporate banking. Okay. Wholesale banking is also called as corporate banking. Kindly remember this, because what happens? Many books write this as wholesale banking, many books write this as corporate banking. So this means corporate banking. Okay. What is the scheduled bank? Scheduled bank is a bank which is in the second schedule of RBI. Second. Now what is this second schedule? Why will this come in the second schedule? Means RBI likes some banks or what? RBI likes, no, this is a good bank. I know this MD. So let me bring it in the second schedule. This MD I don't like. We had a quarrel once. So now forget it. No scheduled. How does any bank comes under the scheduled bank category? How does it come? Scheduled bank category means basically SLR and CRR. Okay, any bank which holds that CRR and SLR will be coming under the scheduled bank category. Okay, so unscheduled banks, they don't hold this SLR. CRR nowadays everyone has to hold, but SLR, these unscheduled, non-scheduled banks don't hold it. So basically what you remember, what is the scheduled bank? Which comes in the second schedule of your RBI Act 1934. The schedule consists of those banks who satisfy various parameters. Now various parameters means what? These parameters as per section 42 of BR Act. What are the parameters? The parameters I'll tell you very simple. Number one, you should not conduct any business other than banking. Simple. Number one. Number two is this: you should maintain that CRR and SLR. That comes under the schedule. Now, third condition is very important. As per as of 2/8/2019, the minimum paid up capital to set up a bank in India is Bharat is 500 crores, of which promoter should have at least 15% share. Earlier, this requisite was 200 crores. So now we have come to the point that 51% is a minimum. Sorry, 500 crores is a minimum. This paid up capital required. Okay, 51% stake with should be with the promoter. Okay, and earlier this amount was 200 CR. So remember, this 500 CR question comes sometimes. What is the minimum paid up capital required for setting up a bank in our country, Bharat? So it is 500 CR. Okay. Everyone who's watching on YouTube, kindly download Adda 24/7 app. Join the batch immediately because today is just the first lecture. Don't miss it. You are having very less time. August, September, October, you are having the exam. Very less time. So don't miss it. Join the classes ASAP. First lecture only. RRB. Special types of commercial banks that provide concessional credit to the agri and the rural sector. So RRB's main job is what? Name itself says. What does the name say? Regional rural. Rural means agri and rural sector, right? RRB was established in 1975 and are registered under the RRB Act 1976. So RRB was formed in 1975 and Act is 1976. Okay, this is a joint venture. Central government 50%, state government 15%, 15, and commercial banks 35%. This commercial bank is called a sponsor bank. There is a in Maharashtra there is a bank Vidarbha Konkan. Yeah, from RRB. Anybody from Vidarbha Konkan? Yeah. So this is basically the logic behind RRB. Central government 50%, state government 15%, 15, and commercial bank is this. Acha, Vaibhav. Okay. Good, yeah. I know you guys means Vidarbha Konkan very well because many of the students have been the students of mine. Many of the employees. Chalo. RRB are joint ventures between central bank, central government, state government, and CBs, commercial banks. Now remember, this commercial bank is called as a sponsor bank. Remember, this is very important part. Nowadays, obviously, now things are going on in a different direction. Now I think so within next 5-10 years, all the RRBs will be private banks, or they'll become one nationalized bank. This whole concept is moving out now. Central government, state government stake, commercial bank. Nowadays, everyone is going towards single bank. All the RRBs may be combined. I'm not saying will be combined, may be combined in coming years. Let's see. But as of now, for your JAIIB, this is the structure. Central bank, central government 50, state 15, and commercial bank 35%. Local area banks. These are organized by private banks. Now look at this. Understand this LAB concept. This LAB is mainly in South India. Okay. Nationalized banks have RRBs, right? Nationalized banks have RRBs. Parallel to this, private banks have LABs. Keep it that simple. Nationalized bank has RRBs, so private banks have LABs. So they are introduced in 1996, organized by private sector. Earning profit is the main objective of LAB. Okay, earning profit. Look at this. Earning profit is the main objective of LAB. Now, earning profit is the objective of any bank nowadays, isn't it? Your nationalized bank also, does your bank doesn't want profit? Every bank wants. Private bank, doesn't it want profit? Every bank wants. But this is given in your book, so we have to focus on this. Okay. LABs are registered under the Companies Act 1956. At present, there are 4 LABs. Now, this is not given in your book. Okay. This is what I've got it from outside. At present, there are 4 LABs, all of which are located in South India. Coastal local, nobody will be asking you the name. This is for just for your information. Coastal Local Area Bank, Capital Local Area Bank, Krishna Bhima Samruddhi Bank, Local Bank, and Subhadra Local Area Bank. Now these names, if you can remember, it's okay. No, only remember 4 LABs are there. That's it. Okay. Specialized banks. Now specialized banks means what? These banks are for specific purpose, like SIDBI, NABARD. What are these specialized banks? What do they do? These banks basically are introduced for a specific purpose. For example, let's say SIDBI, Small Industrial Development Bank of India. What does it do? Name itself, Small Industries Development. So small industries, MSME. Exim Bank, what will it do? Export import. Name itself, NABARD, National Bank for Agriculture and Rural Development. So agri and rural. So NABARD. So specific purpose. But now my question to you is, all these specialized banks, have you seen the branch of any bank? Exim Bank, have you seen the branch in your city? Exim Bank branch. And then what do they do? Saving current FD. Do they do all these things? Does SIDBI does saving current FD? No, they don't do it. They don't do anything. So what do they do then? If they don't do saving current FD, they don't have customers. So what do? They provide soft loans. They always provide soft loans. What is soft loan? Very important concept from banking. What is a soft loan? Soft loan means that loan which is given as a assistance, support. I'll give you a simple example. Suppose if you want to give a loan to any customer. Okay, yeah, correct, Nitin. So you want to give this loan to any customer. What do you do generally? 75% will be the bank and 25% is that customer, right? Margin. Right, 75% is the bank and this 25% is the customer's margin. Generally, any CC, term loan, anything, right? General thing I'm talking. Home loan it's different, car loan it's different. In home loan it's up to 90%, car loan it's up to 90%. But that's a separate issue. I'm talking about commercial loans. Generally 75-25. So what happens over here is this 25% which the customer has to bring. Many a times this customer doesn't have even 25%. So in that case, what happens? This customer approaches either NABARD, depending on what type of customer is that. If that customer is a MSME company, it will approach the SIDBI. If the customer is living in the rural area, individual, that customer will approach this NABARD. And they will give this customer 20% extra. So now customer has to bring only 5% and 20% is given by these specialized banks. These are all subsidies, correct? All these are subsidies. So all the subsidies are provided by these banks. Okay. So that's the basic job of these banks. And what do they do? How do they provide a subsidy? See, this is known as a soft loan. Soft loan means what? Whenever this 25% margin is to be given from that customer, if that customer applies to this SIDBI or NABARD or anyone, depending on his category, his or her category. So in that case, the bank, this SIDBI, NABARD, etc., will provide 20% to the bank, not to the customer. They'll put it in the bank's account. Okay. So that will be a margin on the part of these institutions to the bank. They are not given directly to the customer. Remember this. Okay. Small finance banks. These are new banks, new type of banks. Small finance means nowadays you might be hearing all this Bandhan Bank, Equitas, AU, General Small Finance. Some of them even close. I think so, being taken over somewhere. So basically, all these new small finance banks which have been formed. What are these banks? What do they do? As the name suggests, these banks, this type of banks looks after the micro industries, small farmers, and unorganized sector of the society by providing them loans and financial assistance. So smaller category they look into. Okay, micro, small industry, small farmers, unorganized sector. RBI has mandated that minimum paid up voting equity capital for small finance banks is 200 CR. For our banks, what is it? Commercial banks, it is 500 CR. For small finance banks, they have kept it 200 CR. Okay, except for the small finance banks which are converted from UCBs. Yeah. Okay. Look at this. Understand the difference very clearly. 500 CR is for our commercial banks, 200 CR is for the small finance banks, and those small finance banks which have been formed due to urban cooperative banks, means cooperative banks which have been merged and form a small finance banks. For them, this criteria is not required, 200 CR. Okay. So for you, from exam point of view, kindly remember two things. One is this 500 CR commercial banks, and second is this. Okay. Subscribe to Officers Adda 24/7 YouTube channel. Those who are watching on YouTube, kindly subscribe to the channel, both English as well as bilingual now. Both the channels are there. Subscribe to it, everyone. Those who are in the paid classes, you also subscribe to this channel, because every day we are giving YT series, YouTube series, on various subjects, various topics on JIIB and CAIIB. So kindly subscribe to it. Get this free. This is freely available. Okay. Payment banks. These are the new banks, newly introduced form of banking. The payment banks have been conceptualized by RBI. People with an account in the payment banks can only deposit an amount up to 2 lakh and cannot apply for loans or credit cards under this account. Payment bank, they cannot give the loans. Okay. So cannot apply for this and deposit up to 2 lakh rupees. It needs to have a minimum capital of what? What is this? 100 CR? 100 crores. Yeah. Minimum capital of 100 CR. My God, this is the highest amount, isn't it? Minimum initial contribution from the promoter of to the payment bank to the paid up equity capital shall be for at least 40% for the first 5 years. So payment banks promoters holding should be 40%. Minimum paid up capital 100 CR. Okay. Important points over here. So what are the names? Various names are there. This Airtel, India Post, Geo Finance, Geo Payments. So these are all new banks, new type of banks which are formed. Yeah. So new payment banks, these are all. So what are the important points from this slide? Deposit up to 2 lakh, cannot apply for loans, 100 crores minimum capital, 40% should be the holding of promoter for first 5 years. The money received as deposit can be invested in secure government securities only in form of SLR. So payment banks, they have to invest this in government securities only. This must amount to 75% of the demand deposit. The remaining 25% is placed as a time deposit with other scheduled commercial banks. Now this is specifically about the payment banks. Okay, yeah, post bank is there. Yeah, they don't need Apurva. They don't need it. When UCB is converted into this small finance or payment bank, small finance, in fact, say this. When UCB is converted into this, they don't need this capital. Okay, yeah. So got it. So payment banks can invest in government securities only in form of SLR. This must be 75% and 25% is to be kept as a deposit, FD, with some other bank, commercial bank only. Okay, now this can be private or government. Payment banks will be permitted to make personal payments and receive cross-border remittances on the current account. So that is okay. Means this is the normal business of any bank. Permitted to make personal payments and receive cross-border remittances. Obviously, cross-border remittance is allowed in any bank nowadays. Even cooperative banks, it's allowed. It can issue debit cards. They provide loan through partner banks. Now, this is very important. They can't give their own loan, but they can make the use of some other bank also. Means like Airtel Payment Bank, they can tie up with SBI, they can tie up with PNB. Okay. Neo banks. Now this is not there in your books. Neo bank is not given in your books, but This is a new concept which has come in. How many of you have heard of neobanks? Have you heard of neobank? Has anyone heard? Write yes in the comment section. If you have heard about the neobank, those who are watching on YouTube, you also type yes in the comment section. If you have heard about neobank, neo. Many of us have not heard about this bank. These are the new banks. Almost 16, 17 banks are there. Neobanks. These are actually not banks. Yeah. Cross-border remittance means Sunil payments from outside. Cross-border remittance means, okay, what is cross-border remittance? Everyone, those who have not got it. Payment from outside. Suppose if there is an NRI who's giving the funds, so those funds can be given to this bank, right? So neobanks means what? These neobanks means these are the new banks which are not the banks. They are not the banks, okay? Yeah, even FDI. FDI is a bigger topic. Don't go into it. Simply consider NRI payments. So neobanks are only digital platforms. These are not banks, but they have been allowed to do this banking business. Neobanks are digital only banking platforms that operate solely online. They don't have a branch. They never have a branch. Simply put, they do not have physical existence. Okay? What do they do? How do these neobanks function? They have a base with some banks. See this example I have given. There is a neobank called as Fi Bank. Has anyone heard about this name, Fi Bank? There is a bank in India, that's Bharat. There's a bank in Bharat which says Fi Bank. There's a name of this bank. We have not heard even about this bank, but there is a bank. What does this bank do? This bank ties up with, let's say, HDFC. This is just one example. So they tie up with HDFC Bank. They meet the customers. Fi Bank will meet the customer, and this customer will open the account with Fi Bank. But actually, the account will be opened with HDFC Bank. It will be opened with HDFC Bank. So HDFC Bank will open the account of this customer of this Fi Bank, and this Fi Bank will give them some extra layer. Suppose let's say HDFC Bank is given let's say 3.5% on savings. So Fi Bank will tell its customer, I'll be giving you 0.25 extra or 1% extra. So I'll give you 4.5%. So this extra 1% will be given by the Fi Bank from its own pocket. Okay, so this is the margin and this is how it works. That's why it's just an online platform. Neobanks promise seamless online experience by bringing in experiential digital layer on the top of the traditional banks. So only remember this much. Don't go into details now. It's not required by you. So remember, there's the base bank. It can be HDFC, SBI, PNB, Bank of Baroda, any bank. This neobank will tie up with this bank, and whatever interest this bank is given, it will add 1% extra and then give it to the customer. Okay? This is how the neobanks work. They don't have a physical existence. They don't have a branch. Look at the income. Why is retail banking important in our country? Because look at the percentage. See this revenue. 60% of the revenue of banking comes from retail. 60%. Wealth management 15%. Means all that mutual fund, insurance, all that. Wholesale banking means corporate banking 25%. Okay. So that's why retail banking is very important. Okay. Retail banking. Now, one more point of why retail banking is important is this. See this image. Suppose let's say I have to give 1 crore rupees as loan. So yeah, if I have to give 1 crore rupees in corporate banking, I'll give it to one customer only. Reliance, Tata, or any local customer also. 1 crore to this single person. And in retail, what will I do? I'll give it to, let's say, 100 customers. 1 lakh each. 1 lakh into 100. So now what is the chance? This one customer can become NPA or the 100 customers can become NPA. All the 100 will never become NPA in the single point, right? So that's why what happens? This retail banking, NPA is lesser. Corporate banking, NPA is a huge chance because only single customer is there. So risk is less in retail banking. Okay. So what is the retail banking segment? It is the largest earning contributor. Largest. It is a segment where people are familiar with. So basically, whenever we talk of bank, we talk of its retail branch, right? Products involved in the retail banking are deposit, credit cards, and mortgages. Deposit means saving current FD. Credit card and mortgages. Mortgages means loans. Okay, various types of loans: home loan, car loan, all personal loan, all the basically loans we are talking of over here. This segment is also known as personal banking as it serves individuals. However, it is targeted towards small commercial clients also. So this is mainly for personal clients like you and me, individuals, CASA accounts. Okay, but this small customers also like proprietor, partner, they also become the customer of this retail only. Can new bank provide a loan? Why not? They can. Why not? Depending on it depends on bank to bank. See this. Many a times what happens when a new branch comes in, new branch. Okay, when any new branch comes in, they don't provide loan for first 6 7 months or 1 year. Sometimes, but that is a bank's call. Any bank can decide on it. RBI doesn't restrict you. Okay. Revenue from retail banking is split into interest and non-interest income. So this income of retail banking will be interest income means what? Loans, right? And non-interest means what? Third party, TPP, fee, commission, etc. Nowadays, all of you are having these TPP targets. Do you have this insurance targets? Everyone? Insurance. Type yes in the comment section. Type yes. Yeah. All of you have. Right. So, third party. Yeah. Officers have target. Okay. Nowadays, what will happen is in future, everyone will have the target. Even the clerical grade will also get the targets now after some years. In some banks already they do have. They have given the targets. Yeah. Even clerical grades have got these targets. Because after all, everyone has to sell insurance nowadays, third party, isn't it? So basically, coming back to this point, yeah. Coming back to this point, the point is bank has two types of incomes. One is your loans, your interest, and second is your third party. Now, this third party means understand one thing. Here we are talking of fee and commission. So fee and commission means what? We have the logic that we have to talk about insurance. Okay, insurance or mutual fund. But there are other products as well which earn a bank this commission or fees. What is that? Locker. What is locker? Locker is not a bank product. Locker is not a bank product at all. We give that locker on rent and we get the what? Rental, yearly, lease, right? So that is also one other product. Ancillary services we call it. Ancillary. This is called as ancillary services. So basically this third party locker, even LC, letter of credit, issuance, guarantee, that fee based income. Okay. So revenue from retail banking is split into interest and non-interest origins. Net interest income for approximately forms 70% of the retail revenues. It is calculated by taking in the interest collected from the loans minus the loan interest given to the depositors, right? So basically, what is your NII? NII means spread. You are having this in your chapter number 3. Whenever we come to this branch profitability, you are having this whole thing. So it is calculated by loan interest minus deposit interest. That is your NII. It's also called as spread. Spread and NII same. Non-interest income contributes 30% of the retail banking segments, right? So 70% is from the interest and 30% from the non-interest. Means basically insurance, mutual fund, third party. Some banks have huge, like if you check the HDFC Bank portfolio, HDFC Bank has around 60 to 70% of the income from third party. Okay. Evolution of retail banking. Now, evolution means what? How did these banks come into origin? This is all not that much history is there, but we won't go that much into deep into it. Okay. The evolution of retail bank can be traced back to the time of foreign banks, entry of foreign banks. Basically, retail banking segment. This was formed by this, in fact, Citibank when it came first, or Standard Chartered. They started this retail concept before the nationalization. See, this retail banking concept is not there after that nationalization in 1960s. Before nationalization of the banks, Standard Chartered was there in our country. Even Citibank was there in our country. First bank which was formed in 1774, and that was in Bank of Hindustan, 1774. Okay. So the conventional banking business was carried out on public sector banks and more generalized approach, and there wasn't any specific demarcation. Basically, what does it mean? Earlier, public sector banks, you banks all, SBI, PNB, Bank of Baroda, all these nationalized banks. Earlier, they didn't give loan to the retail customers. Never. They gave only the loan to corporates. They never gave loan to retail customers. Then in 1964 to 69, banks were nationalized. Then you started retail banking. Otherwise, it was not there. Okay. Customers and industry segmentation was adopted in the business plan of the banks. So customers and industries, two separate segments. Industry means corporate. Customer means retail. There was no attempt to offer products and services based on the specific customer segments in a focused way. So this is all general gyan. Important part is only evolution, that public sector banks only giving loans to corporates earlier. The entry of private sector banks in 1990s, basically in 1994, all these banks started. It was after the Narsimham Committee, 1991, created new approach to the retail banking. They had the advantage of technology right from the start. From the first day, they had the technology. Technology means what? CBS, core banking software. Core banking software came in our nationalized banks in 2007-8. After 2007-8, even 10 you can say. Up to that time, many of the nationalized banks didn't have this CBS. Okay. So, but the private sector banks, HDFC, ICICI, from the day one they had this CBS. So technology was an advantage for them. They had the advantage of technology right from the start. These banks had clear mind with retail banking and aggressively strategized creating new markets for the retail part. So this is forget it. So they had the advantage of technology from the start. Exam question is this. Okay. Now what is this? See this Yes Bank, earlier it had 68% corporate, only 32% as your retail. But then now it shifted. Now it has more retail and then less corporate. 1991 Narsimham Committee, very important. Because of this committee only the private banks were formed. And because of this committee only you all are facing this insurance problem today. All of you are selling insurance now. That is because of this Narsimham Committee. So blame it on that. But after all, it was good. Otherwise, banks would have not even existed today. Mind it. If the banks wouldn't have changed, if Narsimham Committee wouldn't have given the comments, banks wouldn't have existed. Okay? Many of the nationalized banks. So much was the NPA. Prerequisite for the success of retail banking. How can you succeed? Presence of efficient delivery mechanism, customer needs and preference channel innovation. Means what? What is customer needs? What does the customer want? You have to give that product only. Customer is asking for insurance and you are giving loans. Customer is asking for loans, you are giving insurance. Right? Zero. Channel innovation. New channels have to be developed. What is the innovation? What is the channel nowadays? What is the channel of banking? The banking channels are means through any ways through which you can reach the customer is known as a channel. Anyways, it can be through a branch, it can be through your BC business correspondent, it can be through your DSA private, it can be through this what internet banking, app banking, mobile banking, telephone banking, everything it can be. So channel innovation, got it? Direct banking, the fastest and the fastest growing and dominant channel of the future. Direct banking. What is direct banking? No human being. Alternate channels. That is direct banking. No human being in between. Product appropriateness means what? Whatever is the right product and going on in the market, that only you should be selling. Okay. Otherwise, in the market, the interest rate going on is 8.5 and you are giving 11%. Who will come to you for loans? Others are giving 8.5% loan and you are giving 11%. Nobody will come to you. Pricing, right? Pricing part means again the loan part. Prerequisites of success. So, scoring models for assessing. Scoring models for assessing the credit worthiness. Now, this is very important part. You are having a separate chapter on this. Scoring models for assessing credit worthiness. You must have the civil report. Not only civil, it can be anything. Which report do you use other than civil? Anyone is using some high mark? Anyone is using high mark? Any bank? I think so. SBI is using high mark. You guys are using high mark or civil? Which report do you use? Your bank. In the comment section, everyone. Those who are watching on YouTube, again in the comment section. Correct? Both you are using. Okay. So, majority 90% of the companies use civil only, but there are others also who use high mark. There are total 4 companies. Okay, 4. We'll see that. We are having that separate topic of civil. Okay. Consumer protection environment. What is consumer protection now? This has become very important topic nowadays. Consumer protection. If anything happens, Experian. Experian is also one of them. Correct, Venkana. So, consumer protection is an important part. Now, customers are very much have a knowledge about their rights. Everyone has a knowledge about their rights, right? So, anything happens, that customer goes to ombudsman or consumer, right? Challenges before retail banking. One second. Challenges before retail banking. So, consumer protection and pricing means what? What are the challenges? What do you face as a limitation of this? Consumer protection and pricing. Anything happens, customer goes into consumer court. Pricing. Other bank is giving the loan at 8.5, you are giving at 9. Customer runs away for this 0.5%. Inadequacy of MIS. MIS means Management Information System. You are having a separate chapter on this. MIS is not complete. That is inadequacy. Understanding the KYC AML issues. Very important KYC. Now, without KYC AML, if you don't do it properly, you are fined heavily by RBI. Heavily. Managing the risk. Risk means relates to a deposit and loans. Okay, means the loans, if they become NPA, how will you pay to the depositors? That's managing the risk. Effects of disruptive new technologies. What is disruptive? Disruptive means what changes immediately. What are the new technologies? See this: AI, artificial intelligence, and blockchain. These are the 2 new technologies which will change the entire banking space. I'll be dealing with this separately. We are having separate chapter on this: AI, blockchain, and digital banking. Separate chapter we are having. Continuing the growth means giving higher growth. Constantly, every bank wants 10% extra, right? Every year they want 10% extra, 15% extra. It's not possible always. Future of retail banking. Rise of young Indian professional. Because of this, young India means basically 65% of our country is below 35. So rise of young Indian professional, educated, growth of economic superpower means fifth largest now, right? We'll be becoming third largest in some time. Increasing purchase power of middle class. So more money in the pocket because of this UPI. What has happened? Funds have been transferred very fast, and purchasing power has increased because everyone gets a loan also nowadays. Financial market reforms, changes in the financial market, whatever has been done by RBI. This approach and model, we'll be doing it separately. We are having a separate chapter on this approach and model, business models, integrated approach. Yeah. Or let's do it. We are having some time over here. Okay. Yeah. Let's do it. Hmm. Let me see. Hold on. Huh? Let me see if we are having that much time. No, this won't be completed. So we'll do it later. We are having a separate chapter on this business approach, integrated approach, departmental approach, SBO approach. We are having separate topic on this. We'll be doing it at that time. Okay. Chalo, we'll stop today. Okay. Tomorrow again same time 8 p.m. Everyone kindly note timing is same 8 p.m. every day. Okay. Tomorrow we'll be dealing with a separate chapter called as retail versus corporate. Difference between retail banking and corporate banking. Okay. Chalo. Bye everyone. Enjoyed? Enjoyed the lecture now? It is more interesting now. As you go on, it becomes more because then you get credit card. Then you get credit card is an interesting topic. You get CIBIL, separate chapter. You get wealth management. Okay, wealth management, investment management, very good topics. You learn a lot in this. Okay, so follow the lectures on a daily basis. Okay, one more point. I will provide you with certain PDFs. Next week I'll be giving you. So that's why those who have not joined the classes watching on YouTube, kindly join it ASAP. From next week, I'll be providing the PDFs and mind date. Whatever I'll give, roughly many of the questions are asked in the exam from that only. So that's why follow whatever I give completely. Okay? Chalo, bye.